Okay, good morning, good afternoon. Thank you for joining the second day of Renaissance Capital's inaugural Trends from the East conference. This session is a panel discussion focused on fintech developments in Nigeria. Specifically, we'll be focusing on agency banking, which is one of the key battlegrounds in Nigerian financial services today, and will remain so over the near to medium term. For those who might be wondering why agency banking, some context. Just as in the power sector in sub-Saharan Africa, where the power stations are centralized, and the grid's reach is insufficient to serve majority of the population, which gave birth to distributed energy solutions, as you often find nowadays in renewable energy. Same thing in financial services. In SSA, we often have a small number of bank branches and ATMs, which are equally insufficient to serve customers and costly to roll out, which leads to the birth of decentralized or last mile solutions. Hence, agency banking, which brings the point of contact much closer to the customer. Across our markets, the most common examples are M-Pesa in Kenya, Fari in Egypt, Orange Money in Francophone Africa, and even MTN Mobile Money in Ghana. In Nigeria, we have all core elements of the competitive landscape active. So I'm talking banks, telcos, and private companies. On today's panel, we have CEOs of the largest private companies rolling out agency banking in Nigeria. So without further ado, let me give our speakers a minute each to introduce themselves. Let's start off with you, Joshua, then Tunde, Tayo, and by no means least, Tosin. Josh.
Great. Thank you very much, Soji. It's good to be here. Hope everyone can hear me fine. So I'm Joshua Yao. I am the Managing VP for OPay, Nigeria. So I grew up in the US and started working in Africa about 20 years ago, and then worked in China for the past 10 years. And then joined OPay about a year ago, and then oversee all the payments and financial services space in OPay, Nigeria. Thank you.
Okay, super. Thanks. Tunde?
Thank you, Soji, for having me. I'm Tunde Ogungbade, Managing Director of Global Accelerex, and now part of Accelerex Holding. We are in the financial services payment space in Nigeria. We've been doing that for close to a decade now. We focus primarily on making sure that we can make transactions easy between consumers, merchants, and from that leapt into the agent network space. Now that our business is somewhat distributed, we have three primary goals. We have a focus on payments. We have a focus on last mile, which is agents, and we have a focus on financial services and digital distribution of financial services. We see an integration between those three ecosystems, and that's a problem we're trying to address for Africa. It's a great pleasure to be here. Thank you.
Super. Taya?
Yeah, Soji, thank you for having me, and good to be on with everybody. So Tayo Oviosu, I am the founder and group CEO of Paga. Paga is the largest mobile money operator in Nigeria. We are focused on building, the PayPal Square for emerging markets, right? We're solving two key problems. One is helping to reduce the use of cash to perform transactions with merchants. And then the second is access to finance. And so we're building out that ecosystem around, solving these problems with merchants and also with individuals. Looking forward to the conversation with you all today.
Okay, thanks. Tosin?
Hi, Soji. Hi, everyone. Happy to be here. I'm Tosin Eniolorunda. I'm the Chief Executive and founder of TeamApt Limited. Arguably, we're one of the latest entrants into the space, but I also believe we're the fastest growing and also the largest by value processed biometrics. TeamApt started in 2015. We started the business by more or less servicing banks initially. More recently, around 2018 and 2019, we pivoted our business to focus on the underserved segment of Nigeria initially, and now more recently, SSA. And our major reason is simply because this is where it's a big combination of our mission statements initially, as well as where some of the largest opportunities are. So I'll be happy to have a conversation with you, gentlemen, and advance the industry.
Okay, thank you. I'm Adesoji, Solanke, and I look after Renaissance Capital's Frontier Banks and Fintech Equity Research. If you do have a question, please drop your questions in the comment section on the right-hand side of your screen. Okay, so let's kick it off. My first question goes to you, Tayo and Tunde. Can you spend just a few minutes helping us understand a bit of the history of agency banking in Nigeria? Perhaps you both can give us context on how things were in the early days of your businesses and why you think the opportunities you saw weren't seized for so long by banks or telcos. Tayo, you go first, then Tunde.
Sure. I think for your audience, it's very important, first of all, for them to be able to differentiate what we do. And as I mentioned in my introduction, we're really building the Square PayPal for Africa. So that's a way to think about what we're doing for emerging markets. And so in doing so, it's really about building this multiple ecosystems, right? And around merchants and then individuals who are using your wallet. So on Paga, you can put cash in Paga, you can have your cards linked, and you can also go perform your transactions at an agent. You can pay merchants digitally, right? So in general, right, to your question, it takes time for a broad population to see some opportunities, right? I remember very well when I started this business in 2009, people thought I was crazy when I talked about a cashless society. You have to remember there was no Bitcoin. Probably everyone in your audience would have thought I was crazy at the time. And so, we've built out the business over time and we've continued investing in that ecosystem, the platform, et cetera. And 2020 was an amazing year for acceleration in that digital direction, driven by COVID, desire to go digital, right? So, we're seeing that in our numbers in terms of the users who are signing up to use Paga. I think at the height of the lockdown, almost 700% quarter-over-quarter growth in signups, and in the merchants who are using our platform as well, and significant growth on that side, about 35x in transaction volume. So, in terms of how other people saw the opportunity, I think you would have to ask them about that. But certainly, we spoke to them about the opportunity. But from our point of view, it's really about building that ecosystem that has a really strong foundation of merchants who you have a relationship with, right? And digitizing their business, helping them. And today we have over 27,000 of these merchants. And not just anyone who has an ID. These are stores. These are people who are actually doing transactions, and building a long-term value proposition with those merchants, helping them digitize their business, helping them bring additional revenue income, making it convenient for consumers and individuals to pay and get paid and to do transactions as well. So we're looking at it from a broad ecosystem point of view. And we're glad to see the market is moving along with us, and the regulations have moved along with us in opening up the opportunity. And it's a very big market. So we'll talk about that. I actually think Nigeria is very understated in terms of the opportunity for payments and digitization.
Tunde? Tunde, I think you're on mute.
Good. Can you hear me now? Great.
Yep.
So if you think about history, we came into the landscape around the, I think, 2011, 2012 time frame, got a license around that time. And we focused purely on one problem. The problem and opportunity we saw in the market, and the value prop for us was really around leapfrogging the ATMs. I think the ATM per capita was probably about under 10 to every 100,000 people. We felt there was a real problem to solve by just getting people to leapfrog the ATMs and really just get out of that cash logistic business by serving merchants with acceptance devices. We really did not see those acceptance devices as primarily a way of just swiping a card. We saw them as a way of just being able to digitize payments. And then around that same period, the CBN had the different agendas and policy statements out to really try to drive financial inclusion. There was a national policy. There was a plan to get things done by 2020. We focused primarily on the merchant space, but we started watching other players trying to solve that problem, looking at it from the mobile money and what it worked that's in I guess, Kenya and other parts of the world. And we noticed that there were challenges with those. We saw that as we tried and continued to mature in the area of digitizing the merchant side, there was a problem with that last mile when it came to cash in, cash out. And we noticed a trend, and the trend began to emerge as we saw like a 35% CAGR growth around that 2013, 14, 15 in the merchant space. we noticed that there was a growth of another area, which is primarily people who really did not have any formal business trying to get into financial services, digital financial services. And we think these were mostly people who were disenfranchised from the telcos, who were primarily trading digital goods in terms of vouchers and recharge cards, who felt that they lost their business when those processes got digitized through the banks and people began to acquire those services from the bank and found another way, a niche to play. And those people started, applying for acceptance devices, POS acceptance devices, and wanted to solve a problem of cash in, cash out and last mile. We noticed a new segment was growing, and we saw trends such as people going to the filling station and wanting to pay with POS and just take cash back. And those trends emerged for us, and we felt that there was an opportunity for us to serve that market and really find a way to solve that last mile problem. And that's why we moved from the merchants into the agents services space. Fast forward, CBN felt that they needed to do more, and of course, SANEF was created. So you can see the policy side was also trying to do more and watching what had happened in Kenya, Bangladesh, India, and trying to do more with the BVN. But the real meat and the potato is really when those people in the hinterland found a way to reduce their costs to access and the cost to serve by making sure that we have acceptance devices. And we felt that the POS was the way that could do it because the challenge had already been solved for last mile with communication. And the rails and the vehicle that the POS was going to ride on was already mostly available because telco was working quite sufficiently well for people. And that's a problem we tried to solve. So we saw the trends of the policy, we saw the trends of the markets and the behavior of the consumers. And of course, we saw what did not work. And that's what enabled us to step into that space and try and contribute our own quota.
That's really helpful. Thank you for the context on the early problems from 10 years ago when you both started and how you picked up on trends that have fueled your growth over that time period, even till today. And also good to know that COVID did help fast track digital adoption. I'm coming over to you now, Josh and Tosin. So 2019 seems to have been quite a pivotal year for your companies, TeamApt and OPay. While OPay was busy fundraising huge sums and scaling across Nigeria, TeamApt had just concluded its capital raise and launched its two core products. What was it about the timing of when you both launched? And why do you think this agency banking opportunity is suddenly the talk of the town by your peers, banks, and telcos? Josh, you go first, then over to you, Tosin.
Well, let me give it a shot. I think 2019 itself might not have some special meaning. But overall, right, if you can look at some global trends, right, especially from the audience who are many investors, from when we raise the funds and talk to the investors, which are really the best funds in Asia and China, like a Sequoia, IDG, Sons of Vision funds, etc., and some of the best best track record funds in China. The reason that we were able to get that capital backing was a lot of them. Basically, the key reason is they thought that there are a lot of they couldn't see many more $10 billion and above deals opportunities, and they think that this could be one of them. So this is one of the long bets where there are a lot of successful deals who could be a unicorn, maybe a $5 billion valuation, etc. But in terms of an sufficiently empty space to as Toya and other ones I mentioned before, right, to get the whole ecosystem, right? You can the Square area is empty, the Stripe area is empty, the new bank area is empty, right? The whole wallet area is empty, right? To get the whole ecosystem in a sufficiently big market, they thought this could be one of the bets. So that's how we raised the fund. But I think it's a function of investors seeing a lot of saturation in fintech investments, especially in say the US, China, maybe some parts of Europe, and then they seeing Africa as being having that opportunity still up for grab. I thought that was an interesting point from them.
Super. Tosin, you've got some color to share?
Yeah, sure. 2019 was an interesting year for us also. We've always run TeamApt with a fundamental ideology. of believing that for you to be able to get traction and execute, you think you need to have a very good team together with a very good market, and you just need enough money to be able to execute your vision. We had proven this many years prior, and we actually deliberately shunned raising till roughly around 2019, when we raised just a small amount of money, mostly just to get some backing that were needed for execution. So 2019 was an interesting year for us because that was the year most of the execution we've been doing in-house began to come out publicly. And of course, we executed in the direction of where some of the biggest opportunities are. Like Josh has said, these are some areas that are still currently empty when you look at international parallels. So we essentially focused on deep core hard execution, because we believe that capital will essentially follow us the moment we're able to focus on this. And I believe the reason why it's the talk of the town now is because we have, you can see some of the numbers I and my colleagues are putting out. These are numbers that are interesting to industry watchers because it's showing interesting traction. But for 2019, for us, 2019 was that year that we actually began to show all we have been working in-house. And of course, we just did a small capital raise just for some form of backing for that.
Okay. That's really good color. Yeah, I think it's interesting to know that there was nothing particularly special about 2019, but things just seem to have come together that year. Also good to hear from Josh that Africa maybe could deliver another unicorn, given what looks like a white space in many financial services verticals. And I also find it quite interesting that in this space, you can actually bootstrap and deliver really, really solid growth in such a short period of time. Okay, so let me now move on to come back to you, Tayo. As you've probably been attacking this agency banking problem the longest, how big is the potential opportunity you think you're all going after? Can you walk us through how you think about it? Maybe there are parallels to other markets you can draw to help us understand this opportunity better.
Yeah, and I think, look, in general, I think the scale of Nigeria is something that, when it comes to payments, that we have to really help people grasp, right? So like Nigeria is a country of 450 billion GDP, 210 million people, 118 million adults. 64% of Nigerians remain unbanked. And for those of us who are banked, making payments is difficult. It's better than when I started, but it's still difficult. And as Josh referenced, there's still a lot of big opportunity within, whether you want to call it Square as what we're doing, or online payments, or just agency banking, or PTSBs with devices, the POS devices in the market. There's a lot of opportunity, right? And so if you think of 2019, and the numbers for 2020 haven't been fully released, but there were $26 billion worth of electronic transactions in 2019, right? At a $450 billion GDP, right? So it just tells you there's still a lot of room to digitize Nigeria, right? And actually, I think that GDP is understated because of how informal the economy really is. The country I will compare Nigeria to, so a lot of the conversation on POS today is because, I think as Tunde said, we have very few ATMs in Nigeria, right? So the number of ATMs are not significant. And so even for those who are banked, getting cash out of your bank account is painful, right? And thus POSs help with that, right? So look, the country I compare Nigeria to is India, right? And I went in actually in 2019 with the central bank to India. Early 2019 with the central bank to India to look at how do we achieve financial inclusion in Nigeria, similar to what India has done, right? 80% of Indians financially included, and how do we do that? And so, what came out of that is the regulation around the payment service banks. What came out of that was SANA, the Shared Agent Network Expansion Facility, of which we're one of the participants, to contribute agents into a shared agent network pool. And and a number of other initiatives have come out of that from the CBN, right? Trying to identify everybody in Nigeria through bank verification numbers and accelerating how we do that, as well as driving regulation in ways that would help spur the business. So I think India is an example I would use. I think there's still lessons for us to take away from what India did that I actually don't know if we've fully taken them away. So, for example, the PSB model came out of India, but that was set up after India already hit 80% financial inclusion, right? And to say, could we get the fast-moving consumer goods companies like Coca-Cola or the mobile operators to actually help us get to the last 20% of that last mile? Interestingly, not one fast-moving consumer goods company took that up. The mobile operators did, and I think later in 2019, Safaricom, which you mentioned earlier, your introduction about M-Pesa, Safaricom quietly left India, no noise, right? Almost 8 years of operating M-Pesa there, and they wrapped it up, closed doors, and moved out. So it's yet to say if the PSB model is going to be successful, right? There's certainly a lot of room for everybody. But the way we think about the opportunity is that there's room for a lot of people. There's room to partner with different entities, whether they're banks or they're telcos, to drive the growth of digital financial services in Nigeria. So I think India is a good example of where you can compare Nigeria to.
That's really good. And actually, Ameya of Flourish, which one of your investors, he actually did flag this India comparison on our last Nigeria FinTech panel. So good to see that that's where the central bank has actually been looking at to try and get some inspiration for how to shape up the space in Nigeria. Okay, so let me come now to you, Tunde and Tosin. It would be good to hear your views on where Nigerian banks and telcos fit in the payments ecosystem and how well positioned you think they are to compete in the evolving landscape. Some banks have launched their agency banking businesses, effectively competing with all of you. MTN is rolling out its agency banking network. Nine Mobile and Glo, they've gotten PSB licenses, and MTN looks like they have a clear path to getting a license soon. It'd be good to hear your thoughts. Tunde, you can go first, then over to you, Tosin.
Thanks, Soji. It's interesting, the business landscape continues to change, and we watch and we see how it evolves. One thing is certain, to Taya's point, that we look at the GDP size, the population size, look at the macros, all the indices align well, and the stars align well for Nigeria in terms of entry for players. So it's not surprising that we have everyone trying to solve it from their viewpoint. So we see the opportunity as immense and huge. Yes, we have a Pan-African focus, and we have entered into other markets in Africa, but we do not lose sight of that Nigerian market, because when you look at the PSB, the new players who are entering, the telcos, we look at banks that are even doing it, whether organically or inorganically, or trying to do some acquisition around that to enter into the agents network service space. We know that there are different pockets of problems that will be solved, and there will be specialization. So if you look at banks, for example, one of the value proposition for them may be, we already have the capital, we can already bank you, so maybe we should just do this and forward integrate and just make this part of a value play, making it easy for people to come into that, to be included, but then have this agent networks thing be somewhat of a subsidiary that drives that agenda for them. If you look at the telcos, they already have a large accounts, a number of people who are somewhat included, but included non-financially. And now this may just be going a step forward and saying, well, we want to include those people who are in our customer base, but I guess it's going to be a crossover between the two sets. And those people who are already included, some of them are already financially included, so they have to weed through those and figure out. But it's, if you have that account and customer records, that may be a good way to play the business model. And that certainly worked, I believe, in M-Pesa's model, and it may work for some telcos in Nigeria. If you look at the pure plays like us, there are problems that we've learned very well. I would dare say that anyone here who mostly are pure plays have understood what it takes at the field, at the grassroots level, building it up, focusing on the geopolitical areas, find out where the opportunities are. Not every region is going to be profitable. Banks learned that because initially when they were building, if you notice also from stats, I think 2014, 2013, 14 was like the peak when banks were building branches all around the countries. And there wasn't really any science to the model of how those locations were selected. And of course, the cost to serve made it very, very prohibitive for them to redeem all the investments. So I think this may be an opportunity for them to look at pursuing things differently. This may be a way to create a loosely disenfranchised business model that helps them grow their branch network without that huge cost. But we, the pure plays, I dare say we've learned a lot. Personally, for Global Accelerex, I will speak for what I know. We've learned what it takes to work with merchants for 10 years, building it from the ground up, doing it across 36 states, 774 local governments, and taking some of that lessons learned beyond the shores of Nigeria to see what works there. So that the opportunity we see is how do you take that same business model, the network management, what has worked with merchant management, take it to the next frontier, which is delivering digital financial services at the last mile. And what happens when you have to scale that business and you have to sustain it so that the revenues there do not create all the challenges we know that exist with agent banks today and agent networks today. I mean, one of the agents, is it a good business model that can sustain the agent in the long run, or would you have that, if you will, churn of agents? Number two, how do you deal with all the challenges around mobilizing, rebalancing of wallets and all the nuances and making sure you have the right type of balance sheet to kind of support that business model? How do you manage this? Is it federated or is it all controlled by the agents? We have the shared agent network. There's no exclusivity with agents in Nigeria. So some of those things we feel that the PSBs, the banks are learning. Some of them have learned, but some of those lessons will have to be learned. I would say that most of the advantage that a company like us or any of the other players on this panel today will bring is that we've got our fingers involved and we've been in it for a long time. There are lessons learned, and those are the things that would give us maybe an advantage. But that said, the market is deep, and I think there's going to be specialization. I think that's where the banks and PSB may have some opportunities, but time will tell, and the jury's still out on it. I think we're all excited about the opportunity, and there are hundreds of millions of people to serve.
Okay. Yeah, like a repository of history on how this space has evolved. So thank you for the caller. Tosin, did you have something to share on the question?
Yeah, I have some opinion on it. I think it's mostly aligned with everybody I said, but I will take it from another view. The three major player categories: telcos, banks, and independents. And the market is divided into like two: acceptance and issuance. Acceptance are agents, ATMs, point of sales. Issuance is people that own customer deposits, mostly banks today. So let's talk about acceptance and issuance. Acceptance and issuance has a network effect that is strong, which means when you control both acceptance and issuance, we know that you have a strong network effect there, and the value of a network is kind of proportional to the square of the number of participants in that network. So that's a fundamental thing that we can't change. The thing is that nobody today has both sides yet. And I think what everybody in every industry analyst keeps thinking is there's something in this thing that we all need to think about. So let's now analyze. Those are the fundamentals. That's the network effect, and the three players are banks, independents, and telcos. So let's analyze each one by one. Telcos don't have it yet, but they can potentially have it. The theory is that telcos have a large distribution network of agents that sell their recharge card and their products, and they have some of the largest customers. But these customers today are not yet financial product customers. They are telco customers. But we can say that cross-selling to these guys will be easy, right? If we, however, analyze the acceptance space, the agency space, the explosion of agents in Nigeria is ridiculous right now. The competition is getting to almost perfect, at least between agents. And I would say agents are almost everywhere. That I cannot see how telcos will come and differentiate by bringing their own agents. They literally have to reuse the same agents on the ground, and which means that you need to give something different to these agents to drop other platforms. And I would say those things are not so much again that you can give, right? I have my colleague here, OPay here. we both know the kind of strategies that we do in the office to be able to keep and hold these agents down. There are not too many things to change for agents on now, other than some of the incumbents advantages and other things that you already have. So I see it as kind of a challenge for a new player to come into the industry to win that side, right? It's not impossible, but you don't have too many things. I'm talking about telco on the agent side. Let me talk about issuing side, however. On the issuing side, they don't also have a very strong advantage, telcos, because yes, there are 51% or maybe 50% of Nigerians that are not yet banked, but Nigeria already has a momentum on how banking is going to work. There's a difference between Nigeria, the way Nigeria is, and the way Kenya or the other parallel markets were when telco started. And Nigeria is already going in the direction of banks, mobile apps, USSD, and cards. That if a telco is going to come in, you cannot come in with the general infrastructure that you usually have, which is SMS toolkit, SIM toolkit and USSD, because those products already exist. So telcos don't have a fundamentally different advantage. So, you can look at things on a micro level, that's execution market, and macro level. Macro level, it says that these guys have huge capital, huge brands. But when you look at what it takes for them to execute it, you know that they have significant challenges to face, even if they get their licenses. It's not impossible. They could do in organic ways. They could buy up some of the largest players and do it. But them doing it from scratch is going to be tougher for them. Banks have the advantage. Some banks like First Money, Access Closer, have some traction on the agency end, but banks as a general have the largest traction on the issuing end. And that's where their advantages are. They have trusted brands. They have built systems for servicing these customers. But on the acquiring end, some of them lag behind. And arguably, the independents have a lot more traction on agency because they generally execute better. They generally execute faster than the banks, right? So the opportunity for banks right now will be perhaps to catch up on the agency end, maybe inorganically or maybe organically. I will see also that organically catching up might also be hard, maybe inorganically, and be able to own both sides of the coin. But it's also going to be an expensive thing because an inorganic acquisition of some of the largest players can actually be bigger than some of the bank's capitalizations in the Nigerian Stock Exchange. So you are looking at eliminating a lot of Nigerian banks and just having only a few tier one banks capable of doing that. But they're also losing that battle on the acquiring end, which now means that the only advantage they have on the issuing end. So let's recap. For telco to win, you need to solve both acquiring and issuing. They don't have too many advantages on both. For banks to win, they need to solve the acquiring side of things. It's going to be an expensive approach. A lot of banks are eliminated already. Independents have a lot of traction, however, on the acquiring end, but don't have a lot of traction on the issuing end. Issuing end is really hard. Really, really hard. You, first of all, are going to face a different kettle of fish. You're going to want to build trust. You're going to want to build servicing systems. You're going to want to build. And a lot of our colleagues have tried, and I won't say they are succeeding, in building an issuing end. It's not hard to know if somebody is succeeding on the issuing end. You will see people using it. It's not numbers that people will be playing on the air. So, and that is what I think the biggest challenge that independents have, because I would not, close my eyes to the fact that it's still a challenge. of course, we can have an industry in Nigeria that's going to mature and everybody will respect their space, right? You hold your acquiring end, I hold my issuing end. And maybe that's a future we're going to see. Or maybe we're going to see a future where somebody will be bold enough to attack both sides of the coin. But if I'm generally going to rate it, I'm going to rate independents having a higher chance.
Yeah.
Simply because they are generally more aggressive and generally have better execution, and they can actually raise a lot more capital.
Okay.
I'll put
Ty, you had a point?
Yeah, when you finish that, go ahead, finish. I like China.
Yeah, and I will say banks second. Banks because they have a very big major component and a very smart one. And those banks, I can list them. There are like 4 of them. I mean, like 5 of them that are possible, right? They have a huge portion of the issuing side, on the acquiring side, they could do something massive. But what is holding banks back are their ability to execute strategy, as well as the cost that can be required. And telcos will jump a notch forward if they go inorganically, and they will certainly should not take a very big look at the advantages, so-called advantages that they have, because in the Nigerian context, it doesn't make too much sense.
Yeah, and I think Tosin's made some interesting points. Am I on? I don't think I'm on.
Yes, you are.
Okay, sorry. Yeah. So I think he's made some interesting points. Look, I think there are a couple of things I want to say. One is the agent landscape is going to change over time, right? And there are going to be different players coming in. I think it's important to note. I mean, there was something said earlier about those who are in the telco space now becoming agents, and you can see people becoming agents. There's a very big difference in empowering people who may not have the financial muscle to do very large individual transactions, right? But still reach people, right? And offer devices out to them. And there's a service to that. There's no doubt about it. And there's a difference in building and digitizing existing merchants who are selling goods in society and who have stores, and digitizing them and building that out. One of the key things that came out of our review on how do we achieve financial inclusion in Nigeria is to ensure that every single agent can do cash in and cash out for all financial institutions who have accounts of any sort, right? So if your license allows you to hold accounts, whether you're a bank or you're a mobile money operator, every agent network will do cash in and cash out from your system. So this is just going to the point he was making about acquirers and issuers, right? In that as everybody builds out agent networks, they are available by regulation to everyone who can issue, right? So I think that's a really important point. Whether the telcos will be successful in doing that is another question. I think what's very obvious, and even to them is obvious, is that the people who distribute their airtime are not good financial services agents. They're looking to build a new network, and they're looking to work with the likes of us. I mean, I was on the call with one of the telcos yesterday about partnering on the agent banking and then leveraging our network. So they're definitely looking to partner, and we see ourselves as being able to partner with the telcos, with the banks, and our business is beyond the agent business, right? So we're also that issuance side. And I know the numbers there. As I said earlier, in the height of the lockdown, 700% quarter-over-quarter growth, revenues up almost 400% last year. So there are some really good numbers coming through that side of things, and it's growing at a very fast pace with millions of users on the platform already.
Yeah, thank you. I like how the conversation is going. So I want to bring Josh into this particular conversation here. So Josh, the question here is, if you were to look 5 to 10 years out, what do you envisage as the likely evolution of this space? How do you think of the banks, telcos, PSBs, or even regulations? It would be good to hear what you think.
Yeah, absolutely. So I think first of all, I give a lot of respect to Mr. Tosin, right? I think the insight that he just gave, and not many people talk about it, is a critical insight. That's the reason for those analysts who are following US stocks, right? That's the reason behind Square's tripling in value they're quadruple in value, this in the past 12 months. Because I think globally, let me just talk about that. Right? A quick note to support and echo what Tosin said. Globally, I think only 2 companies have done dominating both the issuing side and the acquiring side, and that's WeChat and Alipay in China. Square is getting to that, and that's why the value quadrupled. Square is doing that through, as through both the Square merchant acquiring and the Cash App. So back to your question, Soji. I think first of all, I think the key to this is my take on it, right? So panelists, please feel free to disagree. What we see, all the hype in the town with agency banking now is only a tip on the iceberg, and that is growing crazy fast. Very very good market for all of us here on this panel. Very good numbers, amazing numbers. The industry should go multiples a year. I think we are almost 70% there to meeting demand. That's my estimate. I think we have almost another 50 to 100% growth. That will come very easily. You won't get all the cars there without ATM machine, but that's only the tip of the iceberg. That this business is actually very superficial now, right? So my first point is what we see, all the hype in agency banking is awesome. You'll be gone in a few years. Not gone, right? You slow down. It won't be as important in a few years. So it's more important for us, right? I think all of us here are looking at it more not so much in terms of agency banking, but more as offline acquiring. What we're doing is building an offline acquiring network. And then with the offline acquiring network, you can do a lot more things after that, right? Kind of supporting Tosin's idea earlier. So if you look at it now, right, what happened is because there are not enough acceptance terminals, when either mobile phone or POS terminals in the market, so people are still using cash. They're going to all our terminal now with this crazy growth number just to do baby step 1, which is drawing out cash so they can go to a merchant to buy bread and buy milk with the cash. Right? The reason they're doing that, is not using cash because the merchant they want to buy milk and buy bread from doesn't have a terminal, doesn't have a POS, or cannot accept digital payment on mobile phone because the mobile device on the issuing side hasn't been broken yet. So this tier, right, roughly by my estimate, this is my reckoning, right, my analysis. Roughly now, maybe $5 done in post acquisition, about $1 is done in merchant acquiring, paying for stuff. $1, about $4 is done in cash in cash out. And this is gradually going to flip. And the key then is to, I think, get enough penetration out in the merchant space, especially the micro merchant space, because there's no super merchants in Nigeria, right? There may be less than 500 stores with chain stores. There's no Starbucks and McDonald's. So get enough deeply into micro merchant space so people can start using cards. And I think that's the first key step, right, to go into kind of the merchant acquiring side. And that the key is to go deep. Right. I think the currently what you see in the market now, that's only step 1, right? That's a good step 1. People on this panel are doing very good on it. We have benefited a lot from it, but that's step 1. And then I think that is that side. And then after that, I think another big opportunity to leapfrog would be to go into actually the bank's territory. Right. In terms of issuance fee for the payment space, that space is very open. But it's regulated, so the fee structure is much less in the US, right? The US is just crazy, right? It's higher than anywhere else on it. So then the key then is to go into I think what we can leapfrog with enough acquiring penetration. What we can leapfrog the credit bureau. So we can offer in the payment data, we can offer intelligent loan and financial services to micro merchants. I think that's the next big step. I think that would be, well, hopefully somebody cracks that. Right. So similar to a Square and Square Capital story. Right. So once you have payments data, you don't need credit bureau data anymore. Right? Or you can in the absence of credit bureau data, which is what is limiting the big pie in Nigeria, which is access to individual credits, right? Individual credit products. That helps you a little bit there. I think that's the second big piece, and then of course there's an online piece, right? There's an online acquiring piece that's also very big. So I think there are a few directions.
Yeah.
Okay. I think Tunde has something to say.
Okay. Thank you very much, Josh. I want to ask you a few quick fire questions, and anyone who has an answer, please feel free to chime in. So one question came in from a client, and he's asking, what do you estimate the size of the payments market in Nigeria today is, and roughly how many customers do you think are currently being served? Very quickly, anyone that has an answer, what do you think?
Yeah, so I can try. I'll be very open with our numbers. I think by my estimate, I think right now the offline POS machine space is roughly about $30 million a month in transaction. And I think that's only 50 to 70% of demand. That's just the POS transaction, right? So as I said, with that divided mostly 80% in cash in, cash out, and then 20% in acquiring, in buying things. And then the online space is smaller than that now, much smaller. Maybe I would say 1/10 of that. Online is still, Nigeria is still, offline is still the king. So the offline space is more than, but the offline space, I mean the online space obviously growing much faster than that.
Okay, and you say offline is 30, so 30 per month. $30 million.
Billion, yeah, roughly speaking.
Yeah. So 30 billion naira.
No, dollars. 30 billion dollars offline per month.
$30 billion offline per month.
You think it's $30 billion offline per month today in the market?
POS, yeah. Sorry, my fault. 2 billion,
Yeah,
2 billion. My fault. 2 billion. My fault. 2 billion. It's a
Okay,
Chinese
so
number. Sorry. Yeah.
We know for a fact that NIBS, if you just say POS alone, right, per month through NIBS, this data is publicly available, is 1.5 billion in December of last year. So that is across all of Nigeria, across all of the banks. Not all transactions go through NIBS, but this is somewhat representative of,
So Tyler, let me come in. And Joshua will know this. The numbers you see in NIBS is not the full.
Yeah, it's not representative.
Not all numbers go through NIBS. I know that as well. That's clear.
Yeah, exactly. And that's what NIBS reports.
So it's good to put things in context. So you're looking at it from what is processed through NIBS, then of course about that $30 million monthly.
2 billion, sorry, yeah.
So then there is so much also happening outside that is not tracked, and there's really no central source or version of the truth. But what you have to really focus on is the GDP size. So whoever asked that question, the real question is you should think about is how much. I will pick 3 markets in Nigeria: single market in Kano, Agbeni in Ibadan, Lagos, Alaba. The transactions happening in those markets in 1 month pre-COVID is probably bigger than the entire transaction that we're doing today in the whole financial services space. If you think about the number of transactions, it's in trillions of naira. I mean, we last year had over 1 trillion naira in transactions, millions, hundreds of millions in volumes. So without really dimensioning the rest of the other players that are doing it, whether through a registered means or other, so the opportunity is really deep, and we're all even trying to get our hands around it.
Yeah. Okay. No, absolutely. Sorry, I definitely don't want to misrepresent, right? So the payment space, right, in terms of total, because mostly it's cash. So the cash space, what the $3 billion a month is offline POS transaction space, right? That's all the stuff that goes to terminal, and as Tunde say, there's a fraction of the economy, right? If you look at, for example, right, we are very surprised that some of our enterprise clients that we have talked to, there are a lot of companies in Nigeria, FMCG companies that sells milk, sells bread, and the annual revenue is in 500 million, $1 or $2 billion in revenue. A lot of them, like 20, 30, 40 of them. Like even to China, that's big. So the Nigerian economy itself, right, what goes to in cash is definitely much bigger.
Yeah. So let me give you a chance to just clarify those numbers, because I've heard different things. So what do you think the size is, whether it's offline or online? I mean,
so that's the thing, right? Sorry guys. So if you think about the payment space, right, it's just all M1, right? It's just cash, and then how much of that cash is digitized to different things.
Yeah.
So the majority now is just cash, and then we don't know what that. I mean, we can just say it's very big. Okay. What goes to the offline offline POS space? where most of that is to draw cash out. After people draw cash out, it circulates in the economy 5-6 times before it goes back in the bank, right? Or maybe more times. The 5-6 times I kind of make that up, but right. So that cash out and cash in, that's roughly about $2 billion a month today, and it's $3 billion a month, a month, and that is growing at double digit every month.
Okay, sounds good. So let me ask another very quick question.
So I have one insight. Sorry, I have one insight.
Yeah, very quickly. Yep, go ahead.
Very quickly. I think there's actually a good proxy for estimating the total volume that the industry has on payments, right? On payments, not cash. Mm-hmm. The problem today is that we don't have a central source. NIBS doesn't have everything. But if you actually go to a bank and basically get a bank's data of how much transactions that they are doing through their cards, that's on the issuing angle. All banks have like a general fair amount, a percentage of the industry that they hold. You can actually get a fair estimation of both the size of the industry in payments, because the card is used regardless of where it's being processed, as well as a player's transaction share. So even when you don't have, the only challenge is that this data is kind of proprietary to banks. But if you have banking partners, it can give you visibility on where cards are being used, which is a function of market shares.
Okay. Okay, I have another question, just in terms of helping us understand the economics, right? So, what do these agents in Nigeria charge? If anyone can help us understand, what do they charge? I mean, when I go pay or whatever, what do I get charged? And how does that number get shared between the agents and one of yourselves? And is that number regulated? Does the central bank regulate it?
So it's a funny number, right? Because there's a number that that the central bank has put out.
Which is what?
It's kind of graduated. I think the lowest band there is 100 naira, but shared, I think 55 naira, 45 naira between the agent and the service provider.
55 to the agent?
I believe so, yes. 55 to the agent, right.
Okay.
But I believe that literally everybody on this panel charges less than that, right? And it's mostly, but yes, that's one thing. But there's also the amounts that the agents also charge on the field. There's an explosion of agents around, and there are all sorts of pressure put on pricing for the agents. But the lower cap for what an agent will charge is dependent on the cost of cash, the cost of rebalancing, and some of the expenses that the agents has in running this business, which is staff costs, rent costs, etc. So it's kind of variable, but you could have some people charging on a 5,000 naira, 100 naira. Some people will charge maybe 50 naira thereabouts. It depends. So, and it also depends on it sort of just depends on that amount. It's not a particularly fixed amount. On a 10,000 naira, you could have a 200 naira charge or a 300 naira charge. It depends.
And the split will be the same, 55, 45?
Oh, sorry.
Or is it always 50?
What I just explained, the last thing I explained is what the agent charges the customer. Now, what the platform will charge him, for some platforms, there's a fixed split, right? Which the agents can still decide to charge higher than that split fee. For some other platforms, we simply just deduct our transaction commission from their wallets. So in those cases,
right.
Yeah.
Okay. Another question that came in was, so this was to OPay. So the question goes, OPay was previously on the issuing side with your wallet. The question is trying to understand why you've exited that, and if you think there's still an opportunity in issuing.
Yeah. So OPay have kind of looked at, have kind of had Tosin's hypothesis in mind since 2 years ago, and then we thought it's important to grab the issuance side first. So I kind of go for the M-Pesa model or the WeChat model, because once if the issuance size is good enough, but everybody have a cell phone, they have a wallet, then you don't even need a POS, right? Then automatically you win the acquiring war. But what we have, just like WeChat and Alipay, but what we have found is actually really hard. Just like Tosin has said, right? Truly, it is. Nigeria is by far the best market in Africa, but for some structural reason, simply because the bank have done a good enough job. to win the issuing side is actually really tough in Nigeria. So we have spent tremendous resources to create use cases. But the most important thing is you have to create use cases for the wallet. People have your wallet, they have to be able to pay somebody, right? So if the first thing to do is to acquire enough merchants, so everybody so you can pay them with the cell phone, that they can scan the QR code on them. This is what WeChat has done in China. We have done it, but the problem is that that's a two-sided market. So you have to get enough scale on that two-sided market in a sufficiently short enough time, which means burning a lot of cash. Just like, so Alipay and Alibaba can do it in China, and WeChat can do it in China because they have a lot of cash. They probably burn $1 or 2 digit $1 million. And then we started, and then we look at the circumstance, and we thought it was so expensive. The people essentially trust the banks too much already. And then we said, okay, let's create a use case of getting rides, and then that also turned out to be too expensive because of how the economy is. Now we are looking at a few other ways. To be honest, we're experimenting. So we're looking at some global experience. Referencing some of the companies we have talked about, like Square. Yeah. And they are doing something. So you should see announcements in the market soon about some of the things that we'll do.
Okay.
But everybody have tried to crack it. Like First Bank have tried to crack it. I think Further Wave is trying to crack it a little bit, and nobody is successful. There's no wallets in Nigeria.
Yeah.
So.
Okay.
I would stand to agree with some of what you're saying, but also disagree with the last point. There are no wallets. So I think we have a very successful wallet business in Nigeria that we can talk about. But yeah.
Yeah. Okay. Great. I'm just trying to be conscious of time. There's two key things I want to just quickly touch on. So you can keep your responses, quite straight to the point. The first one is around expansion. So Tosin, Tayo, Josh, you've all announced plans to expand outside Nigeria. TeamApt and OPay to North Africa. I believe that might be Egypt. Paga to Mexico and Ethiopia. Can you each talk about, firstly, why expansion at this time, considering what you've all said is the scale of the opportunity you see in Nigeria? And secondly, what attracts you to these countries, and why do you think you can win? So short, quick to the point. Tosin, you can go first. Then Tayo, then Josh.
All right. I'll start with why some of those economies. I think generally for mobile money, you should look at economies in two ways: bank dominated, mobile money dominated. For the reason I explained earlier, the network effect of acquiring and issuing, it's generally easier to compete in a bank-dominated economy. You don't want to be a zoner, for example. So that's one of the first checks that you need to have. Number two, you want to ensure that the economies are large enough to sustain, because this is a deep expansion. You can expand horizontally or vertically. And if you want to expand vertically, you want to ensure that the amount of time and energy you're going to spend in this economy is worth it. So by the time, and also you want to ensure that there's still an existing opportunity in those economies. If you take a map of the world and you apply all these things there, if you just eliminate a lot of countries, and some of the interesting countries are some of the ones in which I and my colleagues have announced. Egypt, particularly because it has some similar parallels with Nigeria, and of course there's also been successful analogies there also. So yes, that's why those countries. Why now? Why now? I think it's time more or less you've gotten to some level of traction. You're still growing aggressively in the beginning of the market, but we believe we also have some traction, some bandwidth to be able to expand our offering as well as expand the mission. Because by the way, TeamApt is deeply driven by both mission and the commercials to also expand the mission to more countries, and that is why now, quickly. Yeah.
Are you able to say what countries you guys are looking at, or not yet?
Yeah, you'll
okay,
see.
Cool. All right. So Ty, do you want to? What are your thoughts on this?
Yeah, no, look, I think for us, we look at it, maybe slightly differently. Fundamentally, we're solving those two problems, right? Use of cash, access to financial services, and building out the ecosystem, both on the issuance side and the merchant acquiring, right? So for us, the platform that we've already built over the last 10 years is one that is multi-currency, multilingual, it's cloud-based. And so the way we've thought about it is that, look, we've learned how to scale this kind of a business in a very informal economy like Nigeria. And there are a lot of countries in Africa and Latin America that are very similar. And so those are the two places where we're looking to launch into different countries in those areas. But we don't think there's a one size fits all. I love that Josh was very transparent about sort of his experience coming to Nigeria, right? It's not a one size fits all. What worked in China is not actually going to work in Nigeria. What's working in Nigeria is not necessarily going to work exactly in Ethiopia or in Mexico or anywhere else. So, the thing is about figuring out what works, what lessons you have, what operational lessons you have that you can take into those markets, and really you do so with different teams, right? We're not losing sight of Nigeria at all. Our approach is to use different teams to build out in those countries.
Okay. So, okay. And Josh, do you want to touch on this? I really want to hear what you have to say. So,
Tunde. Oh, okay. So I think as Tosin said, we can go deep or go wide. So for someone with our business model, I think just like for someone with our business model, it's better to go deep. Nigeria is big enough, so we want to focus on Nigeria and really get the whole scope, deep of financial services and payments. And then the second market we choose would be also hopefully big market, somewhere maybe in North Africa. So we're working on that still. So you see more public announcements on that.
Okay, super. I just want to ask my last question now to Tunde. So Tunde, congratulations on having raised $20 million from African Capital Alliance last year. And Global Accelerex, you operate in what is called PTSP and PSSP, and you have plans in agency banking and microfinance based on the public press release. Can you help us better understand the difference between PTSP and PSSP? And if you could share some color on how you see your strategy evolving over time.
Thank you very much. The strategy, the big picture we see again is solving the problem of payment and financial access across the continent, Africa. So when we went about that fundraise, our whole objective was to try to find the right partner who had the structure and strength, who had done this with similar players, whether it's in the telco space and otherwise, to have that Pan-African expansion. So you talked about PTSP, which was our roots where we started providing services and really honing in the strengths and knowledge of field computing and what it takes to deliver digital service and payment at the last mile using those acceptance devices. And of course, PSSP then gives you that kind of gateway, the Square, PayPal type complement, because there is a segment of market that needs to be served with those products. But those two things complement one another. And we feel that as Africa evolves, as the journey continues, COVID has created what I call as the COVID digital converts, the CDCs. Those people are going to grow into e-tailers, whether it's a small business, and they're going to get into that kind of web acceptance. So we want to be prepared for that. But at the same time, we believe that having those foot soldiers, the agents who are there to be able to deliver digital financial services at the last mile is very critical, complemented with the right tools, technology, and platform. So this whole capital raise was to take our decade of experience, complement it with the lessons learned from Nigeria, and find a way of exporting that. We really also did the microfinance bank because, again, everyone has been talking about Square and talking about PayPal. If you look at their models, yes, they solve the problem on one side and, of course, the issuing side. But we feel that the AFAM can also be brought into it. Everyone knows about what AFAM just went public less than 2 months ago in the US. So if we can find a way of bringing a cross-pollination between the PayPal or Square model and bringing that together with the AFAM, that's what we're trying to do with the microfinance play. We believe that there is an opportunity that doesn't necessarily focus on the problem the banks are trying to solve, but then gives you a way to cross into that issuance side. And we believe that AFAM PayPal or AFAM Square model may be what we can bring together by bringing a cross-sectional view between all these three elements and use that to serve the market. So with this capital that we've raised, we are going to be focused, and we've announced some countries. We've mentioned Ghana, we've mentioned East Africa. We're going to places where we feel we can add value. As Tosin said, the markets, the macro, the GDPs are deep enough, and we can take the lessons learned. But we're not leaving sight of Nigeria. We know that market still has a lot of problems to solve. There's a lot of places to digitize, and the capital will also give us a way to build our roots downwards and also reach out into those other segments in sub-Saharan Africa to serve those markets. So we're glad about the partnership. The journey so far has been very, very exciting, and we know that there's just so much more that we can do for the African consumer and the African payers.
Okay, super. Okay, so I just want to ask the very last question to Tosin. So Tosin, one question: what do you think about consolidation in your independent space? That's the first thing. And if you can just leave us with, there's a formula you mentioned earlier on about acceptance and issuance and growing in some, there's that formula you mentioned. If you can just repeat the formula so that you leave it etched in our memories. That'll be good.
All right, thank you. First, consolidation. I think, consolidation, the basis of consolidation is that two or more entities coming together, the singular entity will become bigger than the sum of all of them together, which is essentially synergy. I'm actually struggling to see synergy as it is right now, except if it's going to be consolidation of some of the largest players. I think the consolidation that you might be aware of, I'm afraid of, is maybe Moneypoint and maybe OPay consolidates now. That might be really significant. But if you see a consolidation of all the smaller elements together, when you look at all the smaller players together, maybe it's going to be interesting to form maybe a third large competition. So between independents, I'm not seeing a very, very interesting opportunity for that. A much more interesting consolidation will be a consolidation of an independent and a capable tier one bank. That's, I think, a much more interesting consolidation. Or an independent and a telco. Those are much more interesting, but those are more of acquisitions than even consolidation. So that's the way I see it. I see it as maybe very big independents coming together, the bigger independents coming together, or maybe all the smaller independents coming together to form one big entity, or an acquisition by a bank or an acquisition by a telco. In terms of the network, I think it's a general thing that the strength of a network is proportional to the square of the elements inside. So to the multiple of the elements inside. So it means that if you have 2 on acquiring, 2 on issuing, the strength is like 4. If you, however, have, remember 2, but if you now have 4 on one side, 4 on the other side, the strength is 16. There's a big difference between 16 and 4. Meanwhile, the difference between both sides is just 2. So it's that network effect that is essentially the strength of people like Facebook, etc. And it's the fact that the network effect exists already in Nigeria that makes displacing banks the way it is with your typical strategy really hard. Perhaps there might be other ways which we are currently also exploring.
Okay, super. Thank you very much, Tosin. You wanted to say something, Josh?
Yeah, so real quick, I think for Tosin's point, right, just to make sure, I think we understand already, but just to be clear, the synergy between acquiring side and issuing side is that when you have, let's say take the Square example, you have a Square Cash app that pays a Square merchant. If you have that, then you don't have to pay anybody else in the ecosystem. Yeah. No bank, no Switch, no Visa, MasterCard.
Yeah.
Fantastic. Look, and I think that's the strategy that one of the companies will look at. That's Fowry in Egypt. It's something that they've announced. They've announced a partnership with Tutuka, and I believe exactly what you've just explained now, Josh. That's the line of thinking of what I think they're trying to build out in Egypt. That's a fantastic business. That we currently cover as well. So I'm going to wrap it up here. This has been an extremely enlightening conversation, and I've learned so much. And I just want to say a very special thank you to all our speakers today and those of you who joined this inaugural Renaissance Capital Trends from the East conference. Thank you all for joining and do enjoy the rest of your day.
Thank you.
Thank you. Take care.
Thank you for having us.
Bye.